I know, you're worried, you don't know what's going on, but let me tell you something. It's going to be okay. Now, listen, the inflation is hot. I was never sold on the fact that we were at an inflection point. I haven't had this YouTube channel for very long, but I've been telling like my family and friends and other people I coach that this thing could run for a little while. And I never was quite sold on it. I mean, we printed a lot of money, guys. Let's be real about it. That's why like, that's not the only reason, but that's one of the reasons I'm extremely bullish in crypto. Now, look at this. US consumer prices jumped 6.2% in October. This is the biggest inflation surge in more than 30 years. Okay, so core inflation, stripping out food and energy, increased 4.6%. That's the fastest gain since August 1991. Energy, shelter, and vehicle costs led the gains, which more than wiped out wage increases that workers received for the month. So, look, in my opinion, this is a big deal. Like, inflation is hot. And what that means is you have less purchasing power. Your money is worth less. It's not worthless, it's just worth less, okay? Now, I got up really early in the morning in the pre-market. I told everybody in the Discord, in my Discord, which the link is below in the description. And I got in the Jedi chat and I started making alerts, and I pulled the ripcord. Everything that was green and had profit, I sold off. Moved it all to cash. Yesterday we moved a lot to cash today as well, and then today in the morning a lot to cash. Everything else that was just a little bit low, whether it be $100 or $500 or $1,000, just a little bit in the red, but not far. I raised the stops up. I raised them to the 6 EMA. And I kept it tight. Some stuff has gotten stopped out. I'm even more in cash. I don't even have a lot open. The reason why I did that is because, look, for 18 months, people have been worried about inflation. Okay? They've been worried about the tapering. They've been worried about rate hikes. And here we are. Okay? And the last time that we had this, was 30 years ago. And the last time that Janet Yellen said we're going to raise interest rates sooner than expected, the market dropped 6%. Well, Janet Yellen came out a while back, not too long ago, and she was like, look, inflation's going to run hot. So it's not like we didn't know. We knew. I mean, look, the media is going to have a field day with this. They love fear at the big media outlets, right? So the headlines are going to be rampant, and it's going to create fear. And I knew that. So I got out because number one, when the inflation's hot, that's bad. Number two, when the media is going to go haywire for a couple days, like, I'm out. And trust me, the dust will settle. They're probably going to raise rates faster to kind of curb this situation. And, I know how to play that, and I'm going to help you guys play that. We know what sectors work well historically with inflation. We know where to be, and if you know where to be, you're always going to win. Okay, there is no safe place to hide today, guys. Okay, you think financials because there's rate hikes and inflation and they're going to do well, and yes, they are going to do well, and yes, that is where we're going to put some money. But financials aren't great today. There is no safe place to hide. Historically, energy does very well when there's inflation, but energy is kind of like spotty and not good, right, in that sector. So there is no safe place to hide. Consumer. I think consumer discretionary, like Hanes and, regular stuff like that, that's doing okay. And that's because that's a flight to safety. It makes sense. Crypto, I could see crypto is going to do well. So I've opened a trade or two on crypto today. But let's take a look at this. Let's just break it down a little bit for you guys. So the consumer price index, which is a basket of products ranging from gasoline and healthcare to groceries and rents, rose 6.2% from a year ago. That's the most since 1990. Okay. On a monthly basis, the CPI increased 0.9% against the 0.6 estimate. So when you have like earnings, and the way it works is like this: analysts will kind of dig into the company, and they will give analyst estimates. Okay, that's the street estimates. When you beat on annual revenue, guidance, margin, earnings per share. That is what's called a surprise. A surprise will create a reaction in the stock in an upward momentum, typically, almost always. The reverse happens when it's the opposite of a surprise, when you don't meet estimates or expectations. So what happens here is when the estimation is zero point 0.6 and it comes in hotter at 0.9, it's the reverse of a surprise. So there's going to be a knee-jerk reaction, okay, and everything is going to fall apart. And there is no safe place to hide in any sector. There's some stuff that's okay today. I think like Disney, and I'm sure construction stocks would probably be good. Materials probably pretty good. Again, that infrastructure is going to be a place we're going to want to put money because we know money is going there. So you always want to go where the money is going. All right. Look, fuel oil prices soared 12.3% for the month, part of a 59.1% increase over the past year. That's crazy, guys. Energy prices overall rose 4.8% in October and are up 30% for the 12-month period. Okay, used vehicles. This keeps showing up, guys. Used vehicle prices, again, were a big contributor to the inflation, rising 2.5% on the month and 26.4% for the year. Food. I'll tell you straight up, I've done some research on this in the past. I know a little bit about this particular thing. When there is inflation and it makes its way to the food, like meats, commodities, breads, things like that, in the supermarket, basically where you go grocery shopping, when it makes its way there and the prices start to increase, it tends to stay. It becomes sticky when it gets to the food part, and that's just a historical thing. So now that it's kind of like showing up in multiple CPI reports in the food sector, when you dine out, it's going to cost more. When you grocery shop, it's going to cost more. And everybody, you and me, we need to eat, right? So, you're going to have to kind of budget, and you're going to have to cook more meals, and, you're going to have to plan that out, because what I'm saying to you is now that inflation is throughout the supermarket, it's probably going to be there for a little while. I'm just leveling with you, just being straight with you, okay? Yeah, I mean, look, food prices also showed a sizable bounce, up 0.9% and 5.3% respectively within the food category. Meat, poultry, fish, and eggs collectively rose 1.7% for the month and 11.9% over the year. That's a lot. I mean, that's a lot. Now, what are they going to do? I mean, I saw something over here that Biden is going to have a plan of attack here. I'm sure the plan of attack is, I mean, what fights inflation is raising interest rates, okay? I mean, that's what fights inflation. So let's just take a look here. President Joe Biden said Wednesday that the new inflation statistics showing America's prices are surging more than they have in 30 years, and that's proof that there is more work to be done to get our economy back to normal. Inflation hurts Americans' pocketbooks, and reversing this trend is a top priority for me, says Biden. Despite a strong economic rebound in recent months with record job growth, rising wages, and a surging stock market, many Americans are feeling negative about the state of economy faced with high prices on gas and other everyday goods as the holiday season approaches. It's true. I mean, look, you're getting hit at the grocery store, you're getting hit at the gas station, you're getting hit every time you move. You get stepped on, you get hurt, right? You're getting damaged. And now you got Christmas and the holidays coming up, and there's shortages of what the kids want at Walmart, and there's your money is going to gas and all these other things. So yeah, it's kind of tough out there, and and look at this. CNN poll released this week shows that more than a third of Americans say the economy is the most pressing problem facing the country, and 52% of Americans disapprove of the job that he's doing as the president. Yeah, so I'm not gonna touch that one right now, but basically this is what goes down. Okay, at some point there will be an inflection point, meaning it's going to come to a top and it's going to come down. Okay, when that happens, things will get better. But right now, it's like kind of a knee-jerk situation. It was going up and up and up, and now it's like way up, and it was the reverse of a surprise, okay? It was hotter than we expected. Now, a lot of things are shifting, with the jobless claims and inflation and GDP and some things like that. This is what I recommend. This is what I'm going to do. This is what I suggest is that we stick to the plan. Today, we don't trade. We're not buying, okay? You got to let the dust settle. I move to cash. I'll wait for the dust to settle. And then when it does, I will pounce on the right opportunity with technicals and being in the right sector with the right fundamental companies that have the right fundamentals, huge beats in the right sectors. And that's going to be the infrastructure plays, okay, like construction. It's going to be financial because you got inflation and you got rate hikes, so they're going to benefit big time. Energy historically does really well. I'm going to add a new one. Real estate does really well in inflationary environments. I even saw something over here. Sectors that perform well during inflationary periods. Higher inflation would prove to be bad news for longer duration equities such as growth stocks and more favorable to inflation hedge equities such as real assets, energy, materials, real estate. It's true. It's true. So, yeah, I mean, you always got to be rotating. You always got to be going with what is in favor. You don't want to be that guy holding the bag in the wrong sector that's like cold and there's no light shining on it. You want to be where the money's going. And right now, everybody is kind of frantic. There's no real safe place to hide. It's crazy out there. It's best to just kind of wait it out. Remember what I had explained, like over all the bear markets and all the bull runs, there's only been a net gain since the 1900s of 24%. That's because there's been these long drawdowns. There's been, at the top of the market in 1929, it didn't come back till the mid-1950s. That's 25 years to get back to even. In 1964, if you bought at the top and through that crash, you waited 18 years to get back to even. And the dot-com bubble, it took many, many, many years. People are just now recovering from the financial crisis. So a net gain has only been made 24% of the time. So what I'm saying to you is you don't need to be in the market all the time. Why would you have 100% of your money in 100% of the time if the net gain has only been 24% over the last 100 or so years? You wouldn't, right? So this is just one of those days that you kind of just sit out, you just watch, you wait for the dust to settle. Now here's some good news from a technical standpoint. When there's dips, corrections, broad market sell-offs, that is when new patterns form. That is when a lot of the value PE, low PE guys will come and stabilize sectors, and then the charts will build, they'll get bullish momentum, and that's when we pounce and we amplify. The traders will amplify, and that's when those big volume breakouts will come. So you just sit it out right now. Keep an eye on my channel, subscribe, like, select the little bell, and then I'll let you know when there's going to be some ones to jump on. Okay? Look, everything is going to be okay, all right? I'm gonna let you guys know tonight is Wheelhouse Wednesdays, where all of the Jedis in the Discord, in the Wheelhouse Trading Discord, is gonna have access to talk with each other, talk with me. We have a live, video and audio stream. It's fun. We had fun last week, and we do that every Wednesday. At the end of the month, I'm gonna DJ for you guys. I gotta, get that set up down here and. But yeah, you guys should, enter the Discord. Just click the link, go in there. It's really fun. We got a crypto area. Everybody's doing charts. Everybody's talking about all the breakouts and, trading crypto. We got a stock area. We have the alert section. We have the Jedi section. We have the one-on-one courses with me. I can help you guys. I can help you protect your capital, which is just as important as making money. Okay? It's 50% is making it, 50% is holding on to it. Okay, I'm sure today some people are bummed out that they lost some of those gains they had. And if you guys were in my course and you were getting those, taking the courses and looking at those alerts in the morning in the Discord, you would have known that I tightened those stops and that I sold a bunch yesterday and I sold a bunch today to avoid the damage because I saw it coming. Remember, I've been doing this for a long, long time. Okay, I have a finance degree. This is like what I do. I've been doing it a long, long time, and I created a YouTube channel for you because there's hungry people looking for information that are holding bags, that are investing not correctly, listening to the wrong people, and I want to help. And so, just subscribe, hit the bell so that you get the notifications, like this video, put a comment, let me know what the problem is, let me know if you have a question, if you want me to look at a chart, I'll help you out. Get in that Discord, you'll have full access to me, I'll help you out in there. And look, the Wheelhouse crew is cool. You know, there's really good people in there. They're all learning really fast, and they're all helping each other. It's not just me. You're going to be around a whole group of good people. So I hope to see you in there. And if you do upgrade to the Padawan or the Jedi, you can be in the Wheelhouse Wednesdays this evening. And you can immediately set up one-on-one coaching with me. We can look at your portfolio if you want. We can talk strategy. We can talk about your goals. We can look at ideas. We can do anything that you want. We can talk about, you know, what has been the hardest thing for you. And then I can, once I understand that, I can come up with a solution. We could curb that and turn that around right away. You know, there's a lot that we can do. And I don't want to see you guys losing money and having to leave the market because you just weren't trained properly or didn't have anybody to help you. So I'm here for you. I appreciate you guys. And oh yeah, we broke 1,000 subs on the channel, so I was really happy about that. But yeah, I appreciate you, and don't worry too much. Just try to make sure you have stops and protection protocols in place. Put your money on the side. This will subside. You got to let the media do what it's going to do. The media is going to be a vicious psycho animal, and it's just going to like create fear, and it's okay. Once the fear goes up and the volatility spikes on that VIX to a certain level, and we know that's kind of the bottom technically on the charts with the VIX spiking up in the opposite direction, we'll come in, we'll buy those bounces, and we'll make a ton of money. So just sit tight, don't trip, all good, and welcome to the wheel.